Hello, fellow traders. 'Tis I, the Rumpled One. And before I switch off this screen, there was a trader that wanted me to add more lines to the TRO my notes. But let me just show you how it works here. You see, I've got two instances here. So if you go here under indicator tag, this is instance 0. And then right here, this is instant 1. So you can, put as many of these on your screen as you like. So I thought that was better than trying to put, 15 or 20 lines in it. It just made the indicator a little unwieldy. So like this is one instance here and this is another instance here. So that's how that works. Okay, I'm coming to you on Sunday, November the 17th. The year's 2019. Let's talk trading. Weekly open and gap. But before we start that, you know it's coming. This week, this is the third week of the month of November, third full week here. We have to have risk and money management because on any one particular trade, we cannot lose more than we're willing to lose on that particular trade. And we've got the weekly chart out here with the dashboard, and we can see we've got 1, 2, 3, 4, 5, 6, 7, maybe 8 pairs that haven't filled. I'm not sure why that's a dash. Maybe there was no gap on the. Maybe it didn't gap. Let's see. We've got a weekly open of 2904. And we had a close of 29.04. There wasn't a gap on the pound dollar. So for the year, the yen is 82 pips below that yearly open. We scrunched the chart, we can see that there. Price almost came back to the previous day's midpoint. So this should be slightly interesting again this week. Here's the range first day of the month. Here's the range first trading day of the year. And this is the first trading day this week. And we can see that range is going to be overlapping part of the opening range for the first day of the year. Looking at the weekly buy zone here, there's the open. You can see price dropped and now it's come back and crossed back over. It's done a couple of crisscrosses. In fact, one trader asked me, we were talking on WhatsApp, and he asked me if I could only have one method out of everything, one method, which one would I choose? And I told him the buy zone for the simple reason price has to range away from the open. Because we know the weekly open, the monthly open, the yearly open, the daily open. We know, and prices has to range just because that's what price does. So by taking buy zone trades or using the buy zone or just the weekly or the open crossover, whichever way price is moving, you just always are constantly trading away from the open. So if price is below the open, you trade short. If it's above, you trade long. Inside bar. Oh, this should be good. We've got an inside bar from Friday right here. And you can see we're in a weekly inside bar right here. Still in a weekly. And you see we had the monthly inside bar high right down here. So who knows, maybe price might try to revisit that sometime this week. The range, okay, we're just what? Oh, maybe 6.5 hours into the trading day here. And there's just hardly any range at all. You can see here price tried to break out the previous day's high, that inside bar, and let's see, it just might try it again later. H1 highest open, H1 lowest open. There's the monthly daily lowest open, monthly daily highest open. So you can see where price is in respect to those two prices. And we spoke about the buy zone. We had the pivot that was outside the buy zone. Okay, we had a gap down. So you had conflicting biases. So we already took out the pivot and then we went and filled the gap. That's how that works sometimes. Rat, only 18, not enough range. And there we see we took out that pivot right there. Now, here's the monthly pivot down here. And then here, let me switch over to H1. You can see where the weekly pivot is. We've already taken out the weekly pivot. So since we've taken out the weekly pivot, weekly R1, 109.3, call it 3.2. Weekly S1, 108.27. Which way is price going to go? Missed pivots. You see we had one a couple days ago. We had one here near the beginning of the month. In fact, I was talking with a trader. A trader had asked me about trading out of a jam, and actually I mentioned the question, and I basically said, the best way to trade your way out of a jam is not to get one in the first place. But I need to go and answer that question. And I was talking with a different trader, and we were talking about he has to work, and how do you do these trades? So, for example, here you see this pivot. Let's say you went long here at the open a couple of days ago, and it missed the pivot, and then you didn't have a stop loss, and price wound up here. Okay, so how do you trade your way out of this mess? Well, you can see here, because this indicator will go back for years looking for missed pivots, and there's just not that many missed pivots. So you were long here, didn't hit it, you come down here. So here's a pivot again. You go long, so now you've maybe doubled your position, okay? And had you went long, you could see you could exit the total position, not just the trade. And that was one of the things I was mentioning, that a lot of times people get focused on one trade. They make one entry on a pair and that's it, as opposed to making multiple entries. Now, fellow traders, boys and girls, these videos are for educational purposes only, and that your results may differ from mine, and that Forex trading, as all trading is, it's very, very, very risky. You can lose all your money. That being said, if you need financial advice, you should seek it from an accredited financial professional. That way, when they lose your money or you lose money taking their advice, you took the advice of an accredited financial professional rather than just somebody you heard on a YouTube video or you read about it on some post on the internet. So that's one way that I mentioned. That's how you can trade your way out of a problem. Because what you're doing is you're saying based on statistics. So you make sure any one position, the size is small enough that it can't wipe you out. So you might want to be able to sustain a 100 pip drawdown because the position size is so small. So like in the case of these pivots, I run these statistics. We look at them every day, right? I'm pretty confident these pivots are going to get hit. So, based on that, I might start loading up on different trades, or maybe it comes down here and I already see it coming through. Maybe one here, maybe you do a Martindale type thing. Not that I'm suggesting you do it. I'm just saying those are possibilities for you can do. And here, you can look at these missed pivots here, but you only see how many were here. So these were the actual misses. And actually, instead of calling this missed pivots, I should call this something like open pivots or unhit pivots, because you can see this list is longer than this. So some of these actually got filled later. Like, for example, this pivot here on 1031, you can see it's on this list, 1031 missed pivot, but you don't see it here because it got covered. Price action. Um, Somebody wanted this template. I posted it out there on the Facebook group. So if you guys want to get a copy of it, and I just did that as a favor. Normally, you guys know where I post my code, but there's a lot of new people, so I just thought I'd do them that little favor. Whoops, why did that happen? Okay, wick zones. Here we go. We were started here, gap down. We entered the wick zone, came out, entered the wick zone. Looks like we're getting ready to come out again. It touched that high, didn't break it, so we're just waiting for a line cross there. Einstein line. Once again, we're so early in the first trading day. London hasn't kicked in quite yet, so we're just kind of waffling around. And you can see here on the tick chart, it's just not that much action. Here we go on the range gauge. Now, other numbers you want to think of. Okay, our weekly ATR, half of it. This is interesting. Okay, so right here, 109 point, call it 109.11. There's one target for the week, and then another target would be 108.42. So we'll revisit that at the end of the week and see if one or both of those were hit. But the range right now is only 19 pips. Somebody was asking me about this, the bar. So what this on the dashboard, the bars since, this says, for example, on the, I don't think we can see it because I've got, let's just take this off. Okay, so for the yen, the high of the day was 2 bars ago, right here, and the low of the day was 5 bars ago. So 1, 2, 3, 4, 5, and you can see it right there. So you can use this indicator to trade reversals, and that's what we use, or this function of the dashboard. That's what we use it for. And yeah, I sent out batch 5 of the donationals today. I hope everybody got them. I included some templates because I have to remember sometimes I coded the dashboard. So yeah, it's pretty simple for me to understand. But some of those internal functions, you have to know the parameters. And I updated the spreadsheet to include some more of the parameters, like on the I highest and I lowest, because somebody wanted a 52-week high or 52-period high, so I made that template for them. And also, I was doing some I was analyzing that trade from last week where I saw something and I just jumped in on about, I forget, 5 or 6 different pairs, and I got lucky, and they all, because the trade went in my favor. So if it goes in my favor, I don't control it. That's luck. It's just that simple. But I was analyzing it, and it looks like I think I see something, so I will share that with you this week. But as you're trading, fellow traders, always keep in mind it's not what you trade, it's how you trade it. So go out there and drain the banks.